Welcome back, everyone. Today's explainer is diving into what has got to be the most tense market environment we've seen in weeks. I mean, we're looking at a setup defined by just extreme pressure, where every single trader out there is sitting on the edge of their seat waiting for a definitive signal. Today, we're going to break down this high-stakes battle between buyers desperately trying to push the market higher and sellers aggressively defending their territory. We'll explore exactly why the crypto market is acting like a coiled spring right now and what the charts are telling us about the days ahead.
All right, lock this number in your head right now, $79,000. This isn't just some random price point. Right now, this is literally the most stubborn, defining level of the entire week for Bitcoin. Practically everything that's happened in the broader digital asset space over the last few days is orbiting around this specific figure. It's become this massive psychological and structural ceiling that the market is just desperately trying to crack.
So, the whole crypto market is currently in a massive consolidation phase, building energy for its next explosive move. Now, it's super easy to look at a sideways chart and think, oh, nothing's happening, this is boring. But honestly, it's the exact opposite. Think of it like a giant pressure cooker. The heat is definitely on, the lid is screwed on tight, and the energy is violently building up inside. Sideways action is really just the market taking a deep breath and accumulating the energy it needs for its next big move.
Okay, let's dive into part 1, Bitcoin resistance and this massive wall at 79K. Let's walk through exactly how this battle played out over the week, because it's been a wild ride of momentum and rejection. After a totally quiet weekend, Monday kicks off with Bitcoin surging to $79,500. But bam, sellers step in aggressively and push it all the way down below 76K by Tuesday. Then midweek hits. The Fed keeps interest rates unchanged, which was totally expected, but the market is so incredibly sensitive right now that Bitcoin still tumbled to just under 75K. Then late week, we get this crazy bounce back to 78K, mostly fueled by geopolitical news like those Iran peace proposal reports. But by Sunday, another push above 79K gets instantly rejected following some political skepticism, and the price just drops right back down. Violent swings, but they keep hitting the exact same ceiling.
So what's actually driving this? It all comes down to a resistance zone. Simply put, this is a critical price level where the selling pressure is just so heavy, it completely stops the asset from rising any further. When we see Bitcoin getting repeatedly rejected at 79K, it tells us traders are watching this barrier like a hawk. Every time buyers try to storm the wall, this massive wave of sell orders gets triggered. It means the barrier is incredibly strong for sure, but it also means we're setting up for an absolutely massive move once that wall finally crumbles.
So what happens to the rest of the market when the king of crypto keeps bumping its head? That brings us to section 2, market sentiment and the overall impact of that 79K wall.
And this brilliantly illustrates the situation. Bitcoin dominance has climbed to 58.5%, while altcoins make up the remaining 41.5%. This really gets to the heart of how Bitcoin's resistance at $79,000 is impacting overall institutional market sentiment. When dominance climbs while prices are basically stuck against a wall, it tells us that institutional capital is acting super defensively. The big players aren't leaving the space, but they're absolutely hiding in the perceived safety and liquidity of Bitcoin. The rest of the market is effectively put on hold, just waiting for a clear signal from the top.
There's a quote from the analysis that really hits the nail on the head here. Capital is still leaning heavily toward Bitcoin despite the lack of a breakout. I mean, Bitcoin's total market cap has been pretty flat, hovering right around $1.57 trillion. But because that dominance metric keeps rising, we have hard proof that institutional funds are playing it incredibly safe. They do not want to be caught holding smaller, riskier assets if that 79K wall holds and the broader market drops. But they're staying heavily positioned to catch the upside if Bitcoin finally breaks through. Now, while Bitcoin is fighting this really loud, volatile war at the top, something completely different is happening elsewhere. Let's look at section 3, XRP consolidation, or the calm before the storm. Right now, XRP is just sitting quietly around $1.40, and compared to Bitcoin's crazy swings, this sideways movement might seem super boring. But you know what? Analysts are looking at this exact structure, and they're not seeing inactivity. They see a critical preparation phase. The pressure is slowly but surely building. XRP isn't just drifting here, it's quietly laying the foundation for a major directional move.
So where does this buildup actually lead? Analysts are basically tracking two main scenarios right now. On the upside, if the broader market momentum turns bullish and we get a solid catalyst, projections point straight to a $1.82 breakout target. On the flip side, if momentum turns bearish, there's a clear downside risk moving toward that $1 support level. The big takeaway here? These extended preparation phases rarely ever end quietly.
They almost always lead to explosive outcomes, one way or the other. Which brings us out to the wider lens in Section 4, the broader consolidation happening across the altcoin market. Let's do a rapid-fire look at the rest of the landscape because it really paints the picture of a market that's just holding its breath. Ethereum is showing strong support, holding nicely above that key $2,300 level. Binance Coin, remarkably stable near $620. And Dogecoin is just chilling around 11 cents with super low volatility. But then you have these outliers. Tron is pushing upward with a 3% gain to 34 cents. And Algorand is a huge standout right now, jumping with double-digit gains and catching a lot of high short-term interest from traders. So to sum that up, we're seeing modest green across most large caps. They're up, but they're definitely hesitant. We've got mid-cap standouts like Algo totally bucking the trend, but we also have noticeable declines in assets like BCH and Hype. And honestly, this perfectly reinforces our whole theme for today. Even in a calm, consolidating market, you'll always find isolated pockets of movement. And all of this is happening while the total crypto market cap is holding incredibly steady at right around $2.7 trillion. The energy is just building across the board. Which brings us to the big question, and the thought I really want to leave you with today. What breaks first? Bitcoin's $79,000 ceiling or XRP's $1.40 consolidation? Whichever one makes the first real definitive move is likely going to set the tone and direction for that entire $2.7 trillion market. The pressure cooker is practically whistling at this point. Keep your eyes on those charts because this consolidation is not going to last forever.